Let's see if I'm actually streaming now. Just waiting on some confirmation to see if this stream quality is okay. If not, then I'll have to change. I have to change my internet over. But yeah, right now we're just looking at the GBP USD chart. You think it's quiet? Alright, no worries. One sec. It could just be because I've turned the microphone down. 1 2 1 2 1 2, and then let me turn up. Where's OBS? It should be alright. The levels seem quite loud. Probably just because I was mumbling. But just double check that for me, Josh. Yeah, no worries. Sweet. Alright. So let me get into this real quick, just so that I'm not chatting shit, basically. So we've been looking at GBP USD all week, right? And we've been waiting for it to pull down, ideally into that daily imbalance that was below us here. But we also identified this 4-hour imbalance here. So what we're fundamentally for is we're looking for a pullback down into a discount array, right? And you know, we had Monday, which was a bank holiday, and then Tuesday, which was a no news day. So we had a bit of consolidation, and then we gapped up real high, based on on a buy side raid that happened overnight, and then we pulled back down into our 4-hour imbalance, right? So I said to you guys that I've got this new way of understanding how the algorithms delivered, right? And I think that this particular thing is very specific to when you have a defined dealing range, right? So you can see that I've got my fib set up here, and there's like a bunch of levels on here, and I'll go through that in a minute. But basically, yeah, let's remove that. Let me just like explain to the people watching what a dealing range is and what my understanding of a dealing range is. My understanding of a dealing range is when buy side liquidity and sell side liquidity have been taken, there is a range of defined price action, right? So you've got your high. And I'm losing my scale of thought here. So right, we've got a high right here, and we've got a low down here, right? Sell side was taken on these 2 days, coming down into this 4-hour imbalance, and we've seen a price pull back and come out of it. So we've got a high, we've got a low, and we've got a range here to go off of. So you've seen ICT talk about the quarters, you know, splitting things into quadrants, right? In multiple series on his channel, he's talked about these quadrant levels, and I think in the 2024 he specifically spoke about splitting up a range into four segments, right? So that's what I've done here. We've got the 4 segments, right? So this is your ICT dealing range theory. And basically what he said in that video, he was talking about how you can take ranges and you will find PD arrays will develop at these quarter midpoints, like, you know, the at all of these points basically. So, you know, and you can go back and study these and go, okay, well, you know, the price consolidated here, and you'd be like, right, well, you know, that's all well and good, but like, how can I use that to predict like where price is going to go? And I don't think it's useful predicting where price is going to go, but I think it's in terms of in that current price direction. So you know, from this high down to that PD array, you know, once that high is in place, how do you know that's the final high? You know, you probably wait for this, and then you could be like, right, okay, let me draw a fib from here to the PD array, and you know, you can have a rough idea of where these points are going to deliver. You know, you could draw it from there to there, and go, oh, well, that doesn't line up. But then, like, you know, you can go from there to there, and you can see here that it comes right up to the midpoint of what this dealing range is going to be, and then dips into the PD array, right? So that's one way you can use it, but that's not what we're here to do. What we're here to do is analyze a predefined dealing range, right? So this will I think this will only work once you have a dealing range in place and set, and we're looking at for the next price leg, right? So one price leg is defined, and we're looking for where price is going to go next. So if we're using these equal highs, these previous equal highs, what we can do is use this price range's dealing range and measure the quarters. But what I've discovered is that if we add midpoint levels to those quarters, so basically splitting it up into 8 quadrants, or it wouldn't be quadrants then, would it? It'd be octants? I don't know. I'm pushing the boundaries a bit here with my understanding of the British language. I'm not going to lie. So I've just made those grey to make those a bit easier to see. Now, what I found was really mind-blowing was when you took these 8 levels and basically applied more what's the word, definition, almost like, you know how like a 1080p display has like a certain number of pixels, and a 1440p display has like an even greater amount of pixels, and a 4K display has an even greater amount of pixels. Basically what we're going to do is we're going to take one of these levels and apply the exact same fib in between these levels, right? And we'll drop down into a lower time frame to sort of like dissect this. And I think this is where ICT gets his logo idea from, for the interlinking Fibonacci sequences and the interlinking Fibonacci circles, because what you're going to see is quite incredible, really. So we've dropped down from like a 15-minute time frame down to a 1 minute, right? Now, this is just one segment of this dealing range, 1/8 of the dealing range that we predefined earlier. And what you can see here is price opening up at midnight in Asia and rebalancing pretty much perfectly to all of these levels. And you can go even further with it as well. Like you can see that even within here, even within, you know, within the fib of the fib, you can do more segments and see that price is respecting these levels, if I drew it correctly. See the wicks stopping at these points here. Like, this is just like ridiculous. It's just so accurate. Like, it's insane. And I think his algorithm that he's coded for MetaTrader or whatever he's using to code these algorithms, this is precisely what it's looking at. It's taking segments of price data and splicing them into these small sections and small sections and small sections, and he can basically define these little pivot points within price, and he's got loads of these things just triggering all the time. constantly trying back and forth, pinging back and forth, pinging back and forth. Like if we drop down to the 15-second chart and have a look back, will it give you the data? Might not give me the data if I do this. Yeah, there we are. It might be cleaner if I was looking on a futures chart, to be honest, because I'm looking on a forex pair. It's not quite giving me the level of detail that I'm looking for, but you can see where these bodies are stopping and where they're closing and where they're opening, and it's just, even on this crude depiction of what it's doing, it's stopping like at the midpoint, at the upper 16th, the upper 16th. You know, like it's ridiculous how accurate this is working. And so basically, you're like, okay, well, this is all well and good, mate, but how am I going to practically use this? Well, what you do, like, what you're looking for is, if you define a dealing range using this method, even just the quarters, and you're seeing that price on the buy side of the curve is respecting these sorts of levels, in terms of, from a directional standpoint, it's respecting these points and bouncing off of it, and then like coming back. Let's take this bit for example. There's a fib up. So we're splicing up this little segment of the original eighth cut out of the dealing range. What we can see is that price is respecting the midpoint, respecting the next quadrant, coming back up into the next segment, then coming back down and respecting the upper the upper eighth here, and then it's coming back down and then coming into a segment of this original octant, I guess. And then it's coming down and respecting these levels. When you see that price is respecting these levels from establishing the original dealing range and then splicing this up, and you're seeing that price is respecting it, coming back, referring to it, coming back, referring to it, you know that basically you're on the right. You've defined the right dealing range. So once price makes a move from buy side to sell side, the buy from the low to the high, it needs to rebalance that, right? So like this is basically, a dealing range is your sell side delivery curve, and your buy side delivery curve needs rebalancing. So what you're doing is you're taking reference from a previous standpoint in the market, and then projecting that forward, and then looking at it, referring to price moving forward. Does that make sense? I hope it does, anyways, because it makes complete sense to me. And by outlining the previous price action, if you're expecting it to pull down and reverse, and you're expecting that market maker buy model, you can basically take every time it runs below a low and respects one of these levels as a buy signal on your buy side. You can literally just layer in a huge position, and as soon as you start getting above the midpoint on your returning axis, you can just manage the trade from there. That's precisely what we've done here. So, yeah, I think that's everything. I mean, everything that I've got for now. And